This is Optimal Finance Daily, episode 337, How Not to Panic During a Stock Market Correction, by Sam of FinancialSamurai.com. And I am Dan, your host and narrator here on the show, where each weekday I read to you from some of the best personal finance blogs on the planet. Welcome back, everybody. Hope you're having a good day so far. And if you have any topic requests for us, I know a lot of you have some ideas, things you'd like to maybe hear me focus on here on the show. Come share those requests with us at oldpodcast.com. Now, today's post is from Sam of Financial Samurai, but before we get into it, if you would like to help us out here at Optimal Finance Daily, one great way to do that is to simply tell someone that there's a podcast narrating blogs to you for free and then show them how to subscribe. Podcasts are still pretty new for a lot of people, so I'm sure that they would appreciate the help. You can also direct them to oldpodcast.com/listen. But for now, let's get right to the post as we optimize your life. How Not to Panic During a Stock Market Correction, by Sam of FinancialSamurai.com. It's exactly during the good times where we need to be more disciplined in our finances because we never know when the bad times will return. With the S&P 500 correcting by 10% in 2016, U.S. leading indicators have turned downwards, unemployment figures have stopped improving, and people are wondering whether Europe will be like the U.S. but much worse. China is down 40% since its crazy 150% rise, and a slowdown is here. If you're American living in America, look at the bright side of things. The US dollar is strengthening, and the 10-year yield has declined to about 2.1%, which is leading to lower rates yet again. The 10-year yield in all its glory really is the most beautiful figure to watch. It can tell the story of everything and anything. The US dollar will always be a global safe haven currency, no matter how hard we try to mess things up. It's good to see that we aren't the only basket cases, as investors sell the euro faster than they can say tapas. What's going on now is that money is shifting towards US assets, namely the property market. Combine an asset shift with cheap debt and rental yields above the current risk-free rate of return, 3.1%, you realize why smart money is moving into the US property market again. Only a minority will agree with the attractiveness of the U.S. property market, and therein lies the opportunity. During bad times, it's always good to reevaluate your finances. I'm not convinced the bad times are back, and I'm actually quite sanguine about the economy with the unemployment level at a tight 5.3%. All the same, here are some suggestions just in case things get ugly for longer. Top 5 things to do when the bad times are back again. 1. Know where your money is. It's important to have an idea of where every single dollar of your wealth is allocated. In a bull market, perhaps suddenly you find yourself with 50% of your net worth in the stock market versus a 35% comfortable allocation. The best way to get a snapshot of your assets is to list everything out in an Excel spreadsheet manually. Reevaluate, rebalance, reconsider. 2. Consider being contrarian and don't confuse brains with a bull market. Was there a reason you've been holding 30% cash in the stock portion of your portfolio? Perhaps the reason was exactly for times like this. It's generally never good to panic in either direction. Imagine capitulating the morning of Tuesday, May 25th, when the Dow was down 290 points, only for the market to be up 110 points the next day. Oopsie. You will immediately notice the mass media start talking about double dips, recessions, and Armageddon scenarios when markets fall. Meanwhile, just last month, the media was talking roses. Frankly, nobody knows where the markets are going in the short run, but in the long run, the bias is generally up. 3. Get in earlier and leave later. In other words, work harder at your job and show that you are an indispensable team player. I can promise you that every manager thinks about cost cutting as soon as we have 10% downward movements in the markets. The manager's goal is to run a profitable business unit, and layoffs are always in the back of their minds. Your manager thinks about a future of what-ifs, and so should you. Buckle down. Be outstanding. You can't control the markets, but you can control how great you are. 4. Prepare for the worst, but keep faith things will be okay. Preparing for the worst means ratcheting down your expenses and getting rid of inventory. Inventory can include your mountain of books, clothes, and your third TV with accompanying third cable box. Expenses can be that $200 a month gym membership you never used. Preparing for the worst also means looking for a new job and developing side incomes just in case your main source gets expunged. If the worst comes, you're ready. And if things are just business as usual, you're pumped. When you prepare for the worst, there's only upside. 5. Look around and realize today is just like yesterday, which will be just like tomorrow. If you didn't have a media stream telling you the world is ending, you'd never let financial losses affect your well-being. Your happiness is all in your mind. You have the power to choose to be happy. It doesn't cost much to touch base with family and friends, or go for a walk in the park. Too often, we close inward and worry about how we're going to retire comfortably during market turmoil. Things come back. They always do. Remember to focus on things you can control and let go of things that wiggle and squirm. If you choose to let fear enter your mind, you might as well use it to fuel new creation. Downturns are exactly the time to start something or do something better. Cherish meltdowns and embrace the challenge. You just listened to the post titled, How Not to Panic During a Stock Market Correction by Sam of FinancialSamurai.com. And thanks for listening all the way through today. Again, if you would like to help this and the other podcasts in the OLD family, a great way to do that would be to simply show a friend or family member how to subscribe. You can let them know that there are podcasts that narrate articles for free on a variety of topics, and then send them over to oldpodcast.com/listen, or better yet, you can simply show them how to subscribe right there on their smartphones. Every new subscriber helps us a ton, so we'd greatly appreciate it. And that's going to do it for today. I will be back with more from the greatest finance blogs out there tomorrow, where your optimal life awaits.
Hello, Life Optimizer. This is Justin Malik, creator and producer of this podcast, but also Optimal Living Daily, the show where I read to you from even more blogs covering finance, productivity, minimalism, personal development, and more, from incredible bloggers like Derek Sivers, Zen Habits, Mark and Angel, The Minimalists, and all the ones you hear on this show too. So if you enjoyed today's episode and like taking amazing blogs on the go, come on over to Optimal Living Daily and subscribe to that one too. And together, we'll start optimizing your life.
You've been listening to Optimal Finance Daily. Be sure to hit the subscribe button to stay up to date on each new episode, and head to oldpodcast.com, that's OLDpodcast.com, for a free gift as well as more actionable tips and resources to help you maximize your potential. Thanks for joining us, and remember, your optimal life awaits.